Let's talk markets right now. Joining us for that is Mona Mahajan. She is Edward Jones Principal and Senior Investment Strategist. And Mona, let's try and figure out what we can take out of earnings so far. Just running through, you hear something like what we heard from Visa yesterday about how they are seeing some slowdown with the consumer, offset today by what American Express is saying about things. Then you've got the consumer electronics weaknesses that are impacting stocks from as wide-flung as Intel to 3M. What do you take out of all of this in terms of what to expect this year and how you think the markets are going to shape up?
Yeah, no, absolutely. And I'd say thus far, Q4 earnings can be described as best mixed. We're early days still. About 22% of earnings have been reported for the S&P 500. About 70% of companies have exceeded earnings expectations. So we're somewhat in line with historical norms in terms of the percentage of beats. But when you look underneath the surface, we are seeing a bit of weakness in some sectors. Financials is one of them, but parts of comm services, healthcare, technology, as you alluded to as well, all showing some signs of mixed results. And overall, we're seeing Q4 earnings growth negative in the fourth quarter, so negative 1.5% or so year on year. Keep in mind, we weren't expecting all that much out of 2023 earnings in general. In fact, flattish earnings growth overall, not much to write home about. But as we look towards 2024, the end of this year, the expectation is still for about a 12% earnings growth. And part of that is just better comps after a somewhat weaker or flattish 2023. We still think that we could get probably a little bit of downward revision to that number, but still somewhere in the 5 to 10% earnings growth range, so pretty healthy. And when you think about it from a market perspective, markets driven by typically earnings growth plus valuation expansion. So we're seeing the earnings growth component in place. Valuation expansion, we do see the potential in certain segments of the market. And as we know, we got tremendous valuation expansion in parts of that tech Magnificent Seven trade last year. We're looking for the rest of the market to play some catch up on that front as well.
Okay, which means you do what as an investor right now?
Yeah, absolutely. So, we've talked about how last year was the trade of narrow leadership. Really, we had this barbell between cash and AI Mag 7 that led this S&P 500 to get a 24% return. This year, we may not see 24% again, but history's on our side. In fact, since 1990, there have been 10 years where the S&P has been higher by 20% plus. 9 out of those 10 years, the following year has been positive, and positive by an average of 13%. So history may not repeat itself, but we could be set up for potentially a positive year. We would say make sure in your portfolios that you're looking at a healthy balance of both growth and cyclical parts of the market, U.S. and some international. And then, of course, your bond market plays a bigger part of your portfolio as well. So complementing some of that CD cash-like money with investment-grade bonds, we think makes a lot of sense here as well. So we'd say balance is a key theme in 2024.